Hi, everyone. This is Jeff Praisman with Interactive Brokers. It's my pleasure to welcome back to the IBKR podcast studio, Will Ryan from GraniteShares. Hey, Will, how are you?
Good, thanks, Jeff. All good, thank you.
It's great to have you in for our monthly podcast on commodities. And today we're going to discuss platinum and palladium. And well, I'd like to kind of start with the basics. I think a lot of people probably have heard of platinum. Maybe their wedding band is made from it, but maybe not so much have heard about palladium, or if they have, they're probably a little unsure of what its uses are. Could you really briefly tell our listeners what the main industrial uses for each metal are?
Happy to, Jeff. So both metals share some similarities. So starting off, they're both precious metals and are included in the term precious metals along with silver and gold, but they are different. And as you rightly pointed out, perhaps less known than their sister metals in silver and gold. So platinum and palladium, they are both precious metals that, in terms of platinum, they can be platinum's used for jewelry, it's used for investment demand, and it's used in industry. And particularly with both platinum and palladium, they're much more industrial than, say, gold. So both metals are used primarily in industry, primarily in the automotive industry, as the catalysts or catalytic converters. These are devices that are fitted on cars and trucks to clean the emissions. Palladium obviously has, just like platinum, has investor or investment demand. It also has some jewelry demand as well. So they are similar in terms of their demand situations, albeit some sectors will favor one over the other.
You mentioned their exposure to auto parts. And given that, are there any economic indicators, like maybe like auto sales data or mining supply reports or ETF flows that savvy investors should monitor?
I think for any commodity, you've got to start with the basics, which is the supply demand situation. And particularly for markets like that, where these metals, they're much smaller markets than something like gold, which people will be perhaps more familiar with. So supply and demand fundamentals can play a much bigger role or a more outsized role in a smaller market than in a bigger market. So with any particular metal, and platinum and palladium are no exception, there's an amount that gets mined every year. There's an amount that typically also comes to the market in form of supply through recycling. And then you've got your demand factors. So you've got your demand from industry, you've got your demand from investment, and your demand from other areas of the market, jewelry, etc. So absolutely, people can look at, if it pertains to, for example, industrial demand through automotive, people can look at vehicle sales around the world. They can look at emission standards and how those are trending, because higher emissions mean more metal in the catalytic converters to clean the emissions. They can look at jewelry demand trends and also ETF and investment flows.
And where are platinum and palladium? Are they, first of all, are they mined in the same region, or what are the main areas of mining for both? And in those areas, have there been any like geopolitical issues that have affected pricing in the past year? Kind of any kind of hints you could give the investor what they should be looking for.
Yeah, absolutely. So both metals, again, they're quite similar in the sense that the majority of both platinum and palladium come from really two countries in the world, South Africa and Russia. Perhaps we don't need to go into in terms of their geopolitical issues and the challenges with Russian production, supply, sanctions, etc. South Africa is maybe one which people that are not familiar with the story might be more interested in. And that is a country where you don't have the same kind of geopolitical issues as Russia, clearly. Perhaps no one does at this stage in the world. But with South Africa, you have other issues. So you have mines which rely on old technology. South Africa has a lot of issues in terms of their power grid and power infrastructure, meaning that power supply to mines can be intermittent, or at least if supply is disrupted, then production stops, which impacts, of course, the amount of metal that can be produced or supplied to the market every year. All those mines as well typically can have labor disputes, labor issues, which again, a striking labor force can also impact supply. And that can mean that production from mines isn't as efficient, as effective as perhaps one might see on paper or in company projected forecasts. So both of the areas, both Russia and South Africa, have their challenges for different reasons. But in particularly in South Africa, with issues around power and labor, those have been probably the two major contributors over the years to disruptions in terms of mine supply.
And since late January, both actually platinum and palladium have experienced a drop in price. And kind of last month we talked about gold and silver's relationship, but over the past year, which metal, platinum or palladium, has performed better? And how does last year's kind of sample compare to their pricing relationship over, say, like the last 5 years?
Yeah, so over the last year, the price of platinum's outperformed the price of palladium. So platinum's definitely done better, but palladium's also done well. I mean, palladium,
Mm.
I think over the last year was up around 60%, platinum just over 100%. So both metals have performed. And again, this is in a market where gold's gone to all-time highs, silver's been chasing it, and now you see platinum and palladium starting to break out also. So both metals have performed well, but the longer term picture is a little bit mixed. So for platinum's been, I would say, in a trading range for a number of years around the sort of $1,000 level. Palladium's had a bit of a mixed or a different situation or a different history whereby price of palladium in the most recent history, the last 10 years, has exploded above $2,000 an ounce and went to all-time highs on the back of a deficit and then collapsed again and sits at the moment at a level where it's starting to appreciate again alongside platinum. So they've had a bit of a mixed history, but I'd say the message for both is that these are metals that are at a discount, so to speak, to the price from a valuation perspective of gold and silver. And maybe this is their time now to shine.
And well, you mentioned earlier that one of the main industrial uses is catalytic converters for both platinum and palladium. And is it for automakers have been looking, let's say you mentioned palladium's kind of an all-time high. Automakers been looking into maybe substituting more platinum for palladium. Is this a zero-sum game for either one of these metals? Whereas at some point, like it's the gains in platinum are going to come against palladium's expense or vice versa? Or is it a case where they can kind of both rise or suffer in the long term?
Just the way to think about it is it's not a zero sum game. It's the platinum in particular has very special qualities as a metal, where platinum has to be used in the main to clean heavier emission engines, and those are diesel engines.
Mhm.
So you can use platinum to clean the emissions from ICE or internal combustion engine vehicles, regular gasoline vehicles. You can also use palladium, but you can't use palladium in the same way on diesel catalytic converters. So from that perspective, platinum, where it dominates and where it shows up most is on the diesel side of the world market. Palladium much more on the gasoline side of the world market. And then to the extent there's substitution, that's around the relative price differential between the two metals at any given time, with the caveat being that for automakers, they tend to buy metals over multi-year contracts. So they're not really sensitive to price on a immediate basis. It's more longer term. And that is one of the reasons why platinum has been outperforming, is that the price of platinum was trading lower than the price of palladium, and automakers were substituting the metal.
And I kind of stick with this auto theme because I think one thing people may not necessarily, if they don't own an electric vehicle, there is no need for a catalytic converter in an electric vehicle. So as these vehicles, I mean, they're obviously significantly more popular than they were 10 years ago, and they seem to be trending where in that direction. As more people adopt electric vehicles, is this an existential threat to palladium demand or platinum demand in catalytic converters in general? And are investors even pricing in this risk, or is this something that they still think is sort of too far away to make a significant impact?
I think the way to think about it is it very much was an existential risk,
Mm.
particularly under the last administration. But again, it wasn't just the last administration. This is something that has very much been a policy directive of major Western governments. Europe has also been very keen on this idea of banning or outlawing internal combustion engine vehicles and had set timelines for doing so. 2030, obviously, being one sort of date in the sand that you were no longer supposedly going to be able to buy a internal combustion engine vehicle. Now, whether that has coincided directly with the new administration, either Trump administration, or whether it was just a natural, the market getting ahead of itself. But I think suffice to say, that's now been pushed back. So I think we went from an environment of perhaps peak bearishness around traditional internal combustion engine vehicles to one, I think, of more rationality now, which has meant that some of those timelines have been pushed back. But I think more broadly, I think the market now sees that the powertrain world that we're going to is not going to be binary. In other words, there's going to still be a mix of ICE vehicles, a mix of electric vehicles. And of course, what a lot of manufacturers are now starting to pivot towards is not just purely electric, but hybrid vehicles. And of course, hybrid vehicles are a combination of both electric powertrain and of course, internal combustion engine. And guess what? They still need a catalytic converter. So I think we've gone from this idea where that we perhaps did think that electric vehicles were going to take over the world and it was more of a binary conversation that I think led to peak bearishness with these metals. Now we're starting to see a bit more rationality sort of creep back into the market. And I think that's really helping the price along with other factors, which we'll talk about.
Yeah, I was gonna say, so is it fair to say that this could be a potential buying opportunity for platinum and or palladium?
Yeah, I think so. I mean, especially in a market where gold and silver have raced to highs, and ordinarily that alone would be a potential trigger to indicate a buying opportunity. But I think what's so interesting about both platinum and palladium is the fundamental story shifted. Both of these markets are in deficit right now, which means that there is more demand than there is supply available. And that is sort of from your commodities or economics 101 would tell you that the setup is positive for both of those metals.
And so obviously our listeners, they're interested in these metals and they obviously people want to know how to gain exposure to both platinum and or palladium. Like, is it physical bullion, ETFs, are there mining stocks, future contracts? What are the pros and cons of each approach?
Yeah. So let's maybe start off with the easiest one. The good news is there are ETFs available on platinum and palladium, just like there are for gold and silver, which I'm sure a lot of the listeners will be very familiar with. So the good news is there are ETFs available on both platinum and palladium, and they are backed by physical platinum and or physical palladium in a vault and track the spot price up or down. I think beyond the ETF, the mining company situation gets a little bit more tricky. And again, this goes to the fact that these are smaller markets than gold and silver. And so there aren't that many companies that mine platinum and or palladium. And so your choices in terms of mining companies are thinner than they are for something like gold and silver. And then lastly, that also feeds into things like the coin and bar market, where there just aren't as many platinum and or palladium coins that get minted in the same way that gold and silver do. So there are platinum coins available. Platinum coins do get made, do get minted, as with palladium, but they're just not as sort of as common as what you see in gold and silver.
Got it. And how do platinum and palladium correlate with asset classes like stocks, bonds, and the other commodities? Are they able to serve as an effective portfolio diversifiers or inflation hedge? Or are they sort of like on their own with systematic risks? Or
I mean, I think it depends again on the time horizon you're looking at, but generally speaking, they will have a positive correlation with stocks typically, albeit lower correlation because clearly there are a different asset class with different drivers. So platinum has some of the benefits, I think some of the correlation benefits of gold, but because it has more industrial applications than gold, it doesn't trade as that sort of safe haven, or as much of a safe haven or a uncorrelated risk as gold. So it does have more correlation to the business cycle, more correlation to economic indicators. And that'd be the same for palladium as well. Palladium has less jewelry use than platinum does. So platinum is a bit more investment and jewelry demand. But that being said, they're probably more correlated to industrial and economic factors like the business cycle.
Right, and that leads me perfectly to my next question, because I wanted to ask you how big picture macroeconomic factors like interest rates, dollar strength, inflation expectations, and recession risks, do they impact platinum and palladium prices differently than gold?
It sort of depends. I would say, generally speaking, it would be similar. And they have, from a hard asset perspective, they have some of the same attributes as gold. I think, though, if we're talking about specifically the currency and interest rate similarities, then interest rates will probably affect them equally, because interest rates are largely correlated or largely an economic signal, and therefore lower rates, all things being equal, signal more economic activity, which should benefit all of those metals, but particularly platinum, palladium. But I think perhaps the more interesting question is around the dollar and the sort of industrialization of the United States and Western countries. And I think particularly for the United States, in that environment, if the administration is really saying, hey, we want to bring manufacturing back to the United States and we want to become a manufacturing powerhouse again, well, that can really only mean one thing, that the dollar has to go lower. And that's the game that the Chinese have been playing for a number of years. But to be an export-driven economy, it definitely helps if you have a competitive currency. And so I think that's part of the reason why, since the administration's come in, you've seen gold, silver, and other hard assets go on the tear, because markets are anticipating a lower dollar environment over time.
And Will, I think we can skip question 11 because you basically covered how they're compared to gold and silver on the prior question, so which is fine. So I'm just going to finish up with question 12 then. So, Will, I want to kind of, in our last podcast, is silver ready to outrun gold? I want to kind of check back on that, right? So we focused on that kind of more popular relationship between gold and silver that most people know, or at least know those two metals, as we kind of discussed here. So we talked about how they performed in 2025 and the beginning of the year. Since we last spoke in mid-January, how have each performed?
So I think it's fair to say that there's been huge volatility, that since both touched their respective highs over the year, there's been a big amount of volatility, including some days where you've had huge drawdowns at both gold, but particularly silver. Now, to some degree, that might be not entirely unexpected, because silver, there's been a huge amount of trading in silver, a huge amount of interest in silver, a huge amount of volatility, huge surge in demand from Chinese investors, which pushed prices to highs, and then also big speculators betting on the price going lower. So it gives you kind of an idea of the fever pitch that was being experienced in the silver market, where you had a silver ETF trade more than any other security, which is an incredible statistic.
Will, this has been great. Thank you so much for coming by the IBKR podcast studio. For more from Will Ryan, you can go to GraniteShares.com, or you can go on our website, click on education, go to our campus. You can find past podcasts and webinars and articles from Will and GraniteShares. Thanks again so much.
Thanks, Jen. Pleasure to be on.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice. Futures are not suitable for all investors. The amount you may lose may be greater than your initial investment. Before trading futures, please read the CFTC risk disclosure. A copy and additional information are available at ibkr.com. Investments in certain commodities, precious metals, may be subject to significant price volatility and often involve risks related to market fluctuations, liquidity constraints, geopolitical events, and changes in global economic conditions that could adversely affect their value. Any discussion or mention of an ETF is not to be construed as recommendation, promotion, or solicitation. All investors should review and consider associated investment risks, charges, and expenses of the investment company or fund prior to investing. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice. U.S. spot gold trading through IBLLC accounts is only available to legal residents of the United States that do not reside in Arizona, Montana, New Hampshire, and Rhode Island.